Hey, capital raisers. I am so excited to let you know that I've just started a newsletter and I want you all to be a part of it because I'm going to have even more tips and tricks to help you increase your capital raising capacity, and it's completely free. So every Tuesday, we're going to send you this newsletter. And like I said, it's going to be in addition to what we cover here on the podcast. So if you're not subscribed, you're going to be missing out on free information you can be using to raise more capital right away. So the link is in the show notes. Go and subscribe today to my Raising Capital for Real Estate Investing newsletter. As I mentioned, it is written by me. It is not written by AI. So yeah, go subscribe, and I can't wait to get that to you next Tuesday. Raising Capital for Real Estate Investing. Hey, friends, I am delighted to welcome you to a coaching episode today. In case you don't know who I am, I'm Amy Silvas. I'm your host, and I am the founder and CEO of Silvas Capital. And I also love to teach folks how to increase their capital raising capacity for their deals. We have courses, we do masterminds, coaching, all sorts of things here. But I love doing these podcasts to help folks where they are in their capital raising business. And I've got my friend Tim Gramling here on the podcast today. Tim, welcome. Thanks so much for taking time out of your day.
Great to be here, Amy, with you.
Thank you. For those who may not know you or know about you, can you tell us a little bit about yourself?
Yeah, so I'm co-founder and lead acquisitions for Next Legacy Group. We are a multifamily investment firm. Currently have about 1,100 units under management. And actually, we're closing on a deal here this week or next week, about 106 units in St. Louis, Missouri. So
Great.
you can add to that number a little bit, about 150 million under assets under management. Actually going to go to 165 once we close this deal. We're also vertically integrated, have both property management, construction. So we're not just acquiring the assets, but we're also operating and maintaining them ourselves. So, and also I'm personally invested in over 2,200 multifamily units as an LP across Texas and Florida. So yeah, that's just a little bit. And so my background's a little bit more unusual for people to get into multifamily than everybody else. I came through it. I'm a professional engineer, been an engineer for 40 years. And actually for about 25 of those years, I was a public works director in a couple of different communities in Missouri. And being that public, if you don't know much about public works, you're basically in charge of overseeing and operating the entire infrastructure for the city, which is streets and water lines and sewer lines, and water treatment, wastewater treatment facilities, dealing with developers, contractors, elected officials, capital improvement projects. I mean, just the whole gamut. I'm also now I'm a consulting engineer. I do business development where I develop and nurture relationships. So I realized after I got into multifamily how much my past career fit right in, transitioned into multifamily, because all an apartment complex is a small community.
Yes.
Just like what I've been dealing with for the past 40 years. So it was a natural transition for me. And so moving into multifamily wasn't a big pivot for me. I'm applying the same discipline in a new asset class, actually. So, and also since the relationship thing that I'm doing now, this is such a relationship oriented business, that's translated, very well as also. So yeah, it's been a great journey so far.
So impressive. You're a busy man. I'm really impressed with what you're able to do vertically integrated. You self-manage. You have all those units. Congrats on your recent close. That is no small feat, especially in today's day and age, right?
Right. Definitely. For sure.
Well, hey, let's give our audience a little bit of orientation around where you are in your capital raising journey. A lot of our listeners can say this by heart, but just as a reminder, here at the podcast, we have 4 phases of capital raisers. The fear zone, where you've had little, if any, success raising capital. Maybe you're feeling a lot of fear and imposter syndrome. Pipeline purgatory, where you've maybe done a raise or two from friends and family, but they're tapped out. You're spending a lot of money trying to generate new leads, maybe traveling to conferences all over the place, raising capital, maybe from other people who are trying to raise capital from you. The bottleneck breakpoint, where capital raising is consistent, but the amount of capital that you're raising has unfortunately plateaued. And the confidence zone, where capital raising feels predictable, each raise grows in size, and your capital raising business really supports your lifestyle. So where would you say that you fall in this, friend?
So after a lot of thought about this, I went back and forth, and I've heard other people say this on your other episodes too. We're between a 2 and a 3.
Okay.
Probably closer to a 3 though. In fact, moving into a 3, I would say.
Okay. Great. So you've raised beyond friends and family, it sounds like,
Yeah.
but
Yes, we have.
maybe, okay, all right. But maybe you've plateaued a little bit in terms of how much you can raise and you're looking to increase your capital raising
Yeah.
capacity.
So one of the things that we do as a group, Nick's Legacy Group, is we actually have a free webinar that we do every Friday night. We call it Friday Night Lights.
Okay.
And we invite new investors, new people to multifamily, and we get on and talk a lot about just the multifamily business, how to get into it. We have guest speakers and all that kind of stuff. But we've kind of developed a little community there, and
Mhm.
we actually raised, a lot of our money from that group. We built it over a couple of years, actually.
Yeah.
And then we've done some investor webinars and those types of things and gotten some capital from that. We're also in some networking groups as well. But yeah, we're kind of, I guess you're running to the end of that part of it and kind of having to reach beyond, what our networks have been. So that's kind of where we're at right now.
That makes sense. Very common place for folks to be in. But congrats on all your success. It is no joke to be able to get into phase three there. I know you said maybe you're a little bit in between, but I agree with you. It sounds like you're more in phase three. So hats off to you. That is no small feat. But would love to continue to help you in your capital raising business. So what questions do you have for me, Tim?
Yeah, so I guess the first one kind of centers around investor conversion. So we regularly have a lot of prospective investors, that express interest, attend webinars, kind of like what I was talking about before, review materials and even schedule calls. I had a lot of calls where we get on and kind of go over everything. Many, never take that final step and actually invest. And so what are the most common reasons investors stall between the interest and the action? And what systems have you seen successfully bridge that gap?
I love this. This could not be more relevant in today's day. So I really appreciate this question to kick us off. So there's several directions I'm going to go. I'll try not to ramble too much, but I also want to cover all of these. The first one is, and it actually may not be the issue you're having, but I'm going to bring it up just in case and also for the audience. It takes about 12 touches nowadays for folks to feel confident in knowing you, liking you, and trusting you. So what I see very often is people have one-on-one phone calls with investors at the top of their funnel. Maybe someone just realized that Tim exists and is interested in what Tim's doing and schedules a phone call. And then the next thing they know, maybe they have a deal presented to them and they're not quite ready. That doesn't sound like your funnel. It sounds like you have routine webinars where you're nurturing folks. But if it's even a monthly webinar that's covering various topics, and you said it's weekly, but just for other folks, if it's monthly, that might not be enough to get folks over the hump there, unfortunately. So having an increased amount of those touches, even before someone gets on the phone call with you, even recorded nurturing sequences that aren't necessarily live that folks can access to really understand this space can be one. So before I go to my other ideas, Tim, I just want to check in with you. Is my assumption correct that that probably isn't your issue? You probably have 12 touches for your folks before they're presented a deal?
Oh yeah.
Okay.
Yeah. With the once a week that, and then, multiple other calls. We actually have a YouTube channel too, and we do post every one of our calls on the YouTube channel for people
Okay.
to look at as well. We don't get a lot
Okay.
of views on those right now, but I mean, I know that's probably one of those works in progress type things.
Yeah.
We've been running the call for about 2 years, but we've only actually been posting on YouTube for maybe the last 2 or 3 months. So
Okay. All right. Very good. Yeah. The other thing that I'm seeing very, very commonly is, and Tim, I'd love to hear if you're addressing this, but we have three elephants in the room right now in our industry. The first one is the Iran war. Whether people say it or not, this kind of atmosphere of uncertainty is freaking people out, and they're not totally sure how to interpret that in terms of investing. The other is tariffs, which, the Supreme Court's ruled this, and but prices of things have gone up. And then, of course, interest rates are higher than, they have been. And very often investors, their experience in real estate is with single family homes. And the mantra they hear, oh, well, interest rates are higher. That's not a good time to buy. So there are these kind of unanswered questions that folks may not even have at the front of their mind, but they're kind of in the background that are giving them some pause. And I talk to plenty of investors, capital raisers, syndicators who say, I don't want to talk about this. I want to help folks understand how, the benefits of investing, all the positive things. I don't want to go negative. And my encouragement is, y'all, we have to call out the elephants in the room. We
yeah.
must talk through how this can impact us, how we're going to mitigate that risk to really get that off the table and move folks along. So I'm curious, Tim, how, if at all, have you addressed that with your investors?
Yeah, I mean, you're exactly right on that. We actually felt that, I mean, it seems like, right toward the end of the year, beginning of this year, it seems like we were starting to see some of the momentum we've been kind of expecting from the multifamily, from all the distressed properties and all that. And the interest rates were, maybe even creeping down a little bit. And then, yeah, you're right. As soon as the Iran war started, that all stopped. The interest rates went back up, and all that momentum just seemed to kind of just come out of the air out of the tires, and everything seemed to go flat. We noticed that as well and heard that from a lot of investors. It was
Mm,
just a lot of, like you said, uncertainty. We actually, the way we addressed that, because what we listened to what people were saying, and it seemed to be, they didn't want to deploy anything into any kind of an investment that was going to have some kind of long-term hold until they had a better idea of what was going on. So we actually came up with a strategy of, we actually are fund managers as well. I forgot to mention that in the beginning.
yeah.
And through our fund, we can not only do multifamily deals, we can also do other kinds of offerings as well. So we actually have a debt offering right now. It's actually live and going. And what we wanted to do was offer this investment to people who kind of wanted to sit, maybe just wanted to sit and not get into something long term, but also have something that has some decent returns. And so we were able to work a deal with one of our partners who has some properties outside of our company that has quite a bit of equity in those, that he wanted to borrow the money from us, from our fund, to do some improvements on some of those properties and then pay us back. And then so we were able to give our investors, depending on, we have like 4 different levels they can invest in, but you could get anywhere from 6 to 12% return. And it's only a 12-month hold. And
Absolutely.
that seemed a lot more appealing. And everybody we've talked to, they love the idea of it. Again, still not, we actually had quite a few people that came in on it. Some of them were repeat from our other deal. But anyway, I mean, it seems to be extremely popular. We haven't heard anybody say, doesn't make any sense to them or whatever. Actually makes a lot of sense given the environment.
Yeah.
So that was the biggest way that we addressed it. But you're right too about, you have to talk about it, because to me, it's just like talking about the negatives of a deal or any other thing. You have to be transparent, because that's how you build credibility and trust with people. If you just ignore those kinds of things, they want to know, what else are you ignoring as well? Or what are you not telling me, or whatever. They may not actually consciously think that, but that's just kind of the effect of it.
You're
So
spot on. You're spot on. So you brought up something that was actually leading into my third point, Tim. So I appreciate you bringing that up. But just to wrap a bow on this, education is our biggest friend as we nurture our investors. We need to help them understand and how to contextualize what's going on. And some people who are listening, multifamily may be the only thing that they offer. So acknowledging higher interest rate, higher, I say that in quotes, interest rates, acknowledging the geopolitical instability, and then in helping investors understand what steps we are taking to mitigate that risk. Is all of it going to go away? Absolutely not. There's risk even when we put money under our mattress. There's risk in the stock market. So we're not going to pretend that the risk doesn't go away, but what levers are we pulling and really helping folks maybe counterbalance the sky is falling that they're hearing from the media so they don't feel
right, yeah,
frozen. Yeah. But yeah,
yeah.
offering. And so what you said about changing your offering was actually going to be the third thing that I was going to mention that's really helpful. It's proactively reaching out to investors who have had phone calls with you, who've attended webinars, and having a true and honest conversation with them about what they're looking for. I have had tremendous success, and I've taught my students this as well of, hey, my job is to find something that you're interested in. It sounds like I
Mhm.
haven't offered you something that fits what you're looking for, so that my next deal can fit something that you're looking for. Do you mind telling me a little bit more about what you're looking for, or what I've presented hasn't fit you? So I think some people, we developed great relationships with them. They don't want to call our babies ugly. They don't want to be
Right.
rude. So opening the door to, to get feedback. And you know what? Sometimes the feedback isn't about the deal. Sometimes you inviting feedback about that actually opens the door to, I'm scared out of my mind, or my spouse is scared, or, hey, I've been stuck on setting up a self-directed IRA and I'm just so busy, and, I haven't gotten that done and it's too much paperwork. What could be unveiled is just incredible. And sometimes we hear, this isn't for me, take me off your list. Great. I'm not in the business of trying to spam you anyway. I'm not trying to convince you to do anything. I'm just here to match you with, help you get to your goals with what I have to offer. So having that open dialogue can really be liberating for the investor and for us as well. We can get great feedback about what folks are looking for. And it sounds like you've been able to find a pivot that fulfills what your investors are looking for right now.
Yeah, I think so. And you're right. That was one of the things when I first got into multifamily and started learning about all the different aspects of all the things you have to do. When they start talking about, raising money from other people, asking people for money is what you kept hearing. That was the part I've dreaded the most. And me as an engineer, initially, introverted, not necessarily, not so much nowadays as it was in the beginning, but, not my natural tendency to want to go out and converse with a whole lot of people. But I got connected with a couple of fundraising or capital raising professionals that have raised billions of dollars actually. And one of them said something that just completely flipped my thought process on this. And that was, we're not asking people for anything. What you're really doing is you're presenting an opportunity.
Yep.
And when I thought about that, I was like, yeah, I mean, I'm finding these deals. I love the deal. I'm excited because I think it can make money for us, and build the future and the freedom that you're looking to build. Why wouldn't I want to offer that to people that I know? I mean, I would almost think you'd be mad at me for not offering it to you. So that was my mindset. And now I actually look forward so much to talking to people about these deals. I don't expect, you know, very many of them to actually take me up on it. That doesn't really even bother me anymore because that's their choice.
Yes.
I'm just offering the opportunity. So it's
Oh,
about the mindset, and I just love that. And that's actually one of the things I've talked about on our call that we do on Fridays, because I really want people to understand that, because I hear so many people dreading that same thing, just, how do I ask people for money? I don't want to go ask my family for money. It's like, don't do that.
yes.
Say, hey, I got this great opportunity. I'm going to do it. I'm going to make some money. Hey, if you want to know about it, let me know. If not, hey, that's fine.
I love it. That mindset shift is everything. And layering on top of that, helping understand what their goals are or their pain points. So,
Right.
hey, if folks are looking to diversify because their entire retirement is in the stock market and that keeps them up at night, great. Here's how to do that. Here's how what I have matches with the goal that you have. So getting really specific with that too is dynamite. I love that you have that mindset
Yeah.
shift. Thank you for articulating that.
Yeah, yeah, sure. Right. Yeah, it's been one of the biggest changes of my life in the last, few years. So
Yeah, none of us want to strong arm people or used car
right,
salesman someone into a deal. Ick. That just
right.
feels
Yeah,
terrible. All of us
yeah,
want to help people, help them reach a goal, help them mitigate a
yeah,
fear. That feels incredible. Yeah, I'm just kind
right.
of sharing what I got going on. So
Yeah.
wonderfully
And
said.
when you couple that with a lot of people, if you've been around very long, you came out of an era just like me. My parents came out of the Depression. And, the economy, the goals back then was just to have a job, to get a job, buy a house, hopefully maybe send your kids to college, the kids get a job, start a 401k, buy a house. That was the dream.
Yes.
That model it doesn't really apply anymore. Money works so much differently now. And there's so many other ways that you've come up with to do that. And people just don't know about that. And that's kind of what I love sharing, is because once that door was open to me, and that was later in life. So I regret all the time that I didn't start this 30 years ago and doing it, or that, or any other kind of alternative investing. But that's what makes me want to share it with other people. So especially younger people, I try to share with as many younger people as I can, and try to tell them, that's the other thing is you don't even have to have a lot of money to do that. You
Right.
just have to get started doing it, because a lot of
Right.
it's about the practice of it and the mindset of it than it is how much it is you're investing. So
Oh, I love that. Tim, before we go on to the second question, I just want to point out something that I'm sure you've heard a lot, but I want to make sure our audience sees. You can't fake Tim's passion. You just can't. It comes through, right? You and I aren't sitting in the same room, but the transference is so apparent, right? You've articulated your why. So you're not just in this space just to make money. You gave us context around where your parents have come from, where you came from, what you wish you would have done, what you've learned since, what kind of drives you and how much passion you have around giving back. That's what gets people so interested in raising capital. You're not just some 2D robot on social media or on YouTube. You're a person with a story, with a passion, with a desire to help. So my hat's off to you, Fred. We're only a few minutes into this podcast, and it's already so clear why you're successful at this. No, truly, I just wanted to point that out because it's really neat
appreciate
to
that.
see. Yeah.
And
Yeah.
You just gave me another idea for the next LinkedIn post that I need to do too.
Okay. Hey, that's great. We all help each other, right? As you mentioned at the beginning, it's a relationship game. We all elevate each other together.
Right,
So
right.
that's the fun part about all this. All right. What you got next for me, friend?
Oh, so investor acquisition channels. What's been the most effective source, of new investor relationships for the capital raisers that you've worked with who have successfully scaled around or beyond the friends and family? And how should someone determine where to focus their time between LinkedIn, referrals, webinars, networking events, podcasts, and all the other channels?
Yeah. Yeah. This is the crux of the issue for all of us, right? We all have limited time. How do we maximize that? And so the framework I teach my students is we can either have one-on-one conversations or we can be one to many. And I think there's a role for both, right? I think most of us were taught to have one-on-one conversations with friends and family, especially by these guru programs a lot of us have gone through. But we soon figure out that that doesn't scale, right? There's not enough hours in the day to have these one-on-one conversations at the top of our funnel, not at the bottom, but at the top of our funnel. So then our choices are one to many, right? So we can start a podcast, we can start a YouTube channel, we can get up on stages at conferences and speak, or we can get on social media. What I found is YouTube is a bit more tough to hack. It's not that it's not effective, but the runway is a lot longer. So that's usually kind of a phase 2 or a phase 3 strategy. Getting up on stages, folks don't necessarily have the credibility or the networking to be able to get up on stages in front of a lot of their target avatars quite yet. Doesn't mean we shouldn't do it, but it's not usually the first step. So then that really leaves us with social media. So what social media is the best? Well, it is the easiest to build credibility on LinkedIn simply because we're all using our real names. You can see our real backgrounds, our employers, our previous employers, our connections, all of those things. And if the goal is to scale our capital raising capacity as quickly as possible, I haven't found anything more quick, more effective than LinkedIn. For me personally, 80% of all capital I've ever raised for my deals has come from complete strangers off of LinkedIn. And it's a common theme that I see with my students as well. But happy to dive in about that more if you'd like.
Yeah, I mean, I've been on LinkedIn for a really long time, but obviously I wasn't in multifamily. I wasn't raising capital. Probably the last 10 months or so is I've really been posting in earnest, and I've done the natural progression of when you're trying to figure it out for yourself and all the mistakes and everything in the beginning. And I feel like I'm getting better at it. I'm still nowhere where I need to be, but I haven't seen the success that you have, obviously. So that's where, the disconnect is for me is what's it going to take to get me from where I'm at now to kind of where you're at, have that same kind of effect. That's what's been tough for me is trying to figure out how to get there
Yes. Yeah.
On LinkedIn specifically.
On LinkedIn specifically. Yeah, that's fair. And I resonate so strongly with you saying, spending 10 months trying to kind of figure out what works and what doesn't. It took me a good 2 years because there was no one out there teaching this type of stuff. So it took me years and years of trying and failing. And the LinkedIn algorithm, as you may have noticed, as a lot of people have noticed, recently changed in the past couple of months. So that even further, it's difficult. It's one of the reasons why several of my friends in this syndication space tapped me on the shoulder and asked me to create a course because they're like, Amy, I don't have time to trial and error this myself. I just need you to tell me what's working and what to do. But the pillars on the platform are essentially to post, which sounds like that's what you've been doing, but post in a way that, when we pick our target avatar, it speaks to the fears, the pain points, and the goals of our target avatar and helps them see how we can help them alleviate those fears and pain points or get to a goal. And then, of course, it's commenting and not just on our own content, but commenting on other people's content where our target avatar is likely hanging out and having a presence there. Making sure our profile, and it's a little bit challenging for people that also have W-2s, but we have ways we can work around that. But making sure your profile shows that you're a credible person in this space. As you can imagine, a lot of people, they haven't heard of passive real estate investing before. They're wondering why their financial advisor hasn't told them about it. They're trying to think of, is this a scam? Is this legit? So every little detail on the platform, including our profile, needs to be elevated to convey that credibility and that sense of that this isn't a scam and this is legit. So yeah, it is not overnight. I'll be candid with you. It doesn't happen, but it usually takes about a good 3 to 6 months on the platform of knowing what to do and executing that to start getting those inbound, hand raisers of saying, well, wait a minute, Tim, what are you doing? How does this work? I want to be a part of that. I want to understand what's going on and invest alongside you.
Okay. Well,
Yeah.
thank you for that.
Oh, of course. Yeah. If you want to dive deeper into that, we can, or we can go on to your next question. Totally up to you.
Well, you mentioned a while ago about the one to many, and I know that's what I need to move to, from the one-to-one investor
Mhm.
to the one-to-many approach, but it's still actually building the investor base. But how do I know when I'm ready to make that transition, and what does the evolution typically look like for successful capital raisers?
Yeah. So you're asking of going from kind of one to many or one to one to one to many?
Yeah.
Yeah.
Right.
Yeah. So the typical funnel, I alluded to this earlier, that I think most of us, heard was from these gurus that taught us how to underwrite, how to find deals, was yeah, go tell your friends and family what you're up to and invite them to the deal. When we change to the one to many, the conversations one on one are actually at the middle or the bottom of the funnel. So the top of the funnel is the one to many, is the social media outreach, the posting, maybe you do the YouTube as you mentioned, those communities. And then we draw people into our customer relationship management system, our CRM, where folks can be nurtured. And we do that through either DM conversations where folks are reaching out to us because our content really speaks to what they're looking for, or lead magnets, right? We provide them an ebook, we give them an educational webinar that talks about what are their pain points, their fears, or their goals. And then once they're in the CRM, that's where we nurture folks, right? Those are those webinars that you talk about, the kind of the newsletters, the topical discussions about what's going on. And once folks go through this process, then they typically are able to raise their hand and say, okay, I think I get this. I think I understand what this is all about. I think this is for me. Now I want to hop on a phone call with Tim and really get my individualized questions answered. So the goal really is those kind of repetitive FAQs, kind of, investing 101 in commercial real estate questions. Those are addressed on LinkedIn. Those are addressed in your CRM, email nurturing campaigns, or webinars. And then when folks really have those individual questions where they're looking to build a relationship and really further solidify their commitment, that's when they get on a phone call with you and have those personalized relationship building conversations. Is that what you're asking, or is there a piece
Yeah.
you want to understand better?
Yeah. I think that's what I was trying to get at. So for sure.
Great question.
Yeah. Oh, well, and then the next one. So I kind of told you already a little, I didn't tell you this part. I am running a coaching business myself.
Wow.
As far as underwriting goes, being an
Okay.
engineer, I was obviously naturally migrated into that.
Yeah.
The spreadsheet stuff was my world. But I actually really took to it in a way that probably in a way that an engineer wouldn't take it. I actually developed this idea of when you're getting into underwriting, actually some of the gurus that I followed had mentioned it a few times and it started sticking in my head. You're not just plugging numbers into a spreadsheet and having it spit out an answer and then
Right.
blindly following whatever.
Right.
It was taking those numbers, putting it in, and actually seeing the story that's being told by those numbers. And what's it telling you about the property or the deal or whatever the case may be. And so I got into this idea. I actually started writing a book. I'm still a long way from finishing it, called The
Oh,
Story Behind the Numbers.
okay.
And that's what I think underwriting is really all about. And so I developed this coaching program around that. Actually I expanded into multifamily too for anybody wanting to get into it this beginning and all that. But I do that. I do the coaching business. I do the weekly investor webinars. We do all the LinkedIn stuff is just, very time consuming, as you well know. And then the business that we're running with Next Legacy Group, almost also still working full time as an engineer, and the webinars that we do on Friday. So a lot of things going on. But if your goal was to maximize capital raise over the next 24 months, where would you focus and what would you eliminate?
Mm. Well, you mentioned something that perked my ears a little bit about, you said, LinkedIn is time consuming, as you know. And that actually gave me a little bit of pause, friend. It shouldn't be all that time consuming. Quite candidly, it should probably take us maybe an hour or so once a week to sit down and batch write our content for the platform, especially with AI. And again, we're not having AI write our posts for us, but AI can help us generate ideas and organize our thoughts. And if we have maybe a person on Fiverr or Upwork create graphics for us, if we create simple graphics for ourselves, yeah, it shouldn't take as much time. It does take a few reps. So I'm not saying right off the bat, it'll take just an hour a week, but we really shouldn't need to be on the platform that long. I am biased, but I think for good reason. I can't think of a more time efficient, productive way to spend time as a capital raiser than on LinkedIn. The reason I say that is because we can talk about nurturing sequences and emails and webinars and all of these things, but that only works so much as we have people coming into the funnel and people attending those webinars and reading those emails, as you know. So if our lead generation, if we're not, introducing ourselves to more strangers that we can serve, the rest of the funnel is fundamentally broken. So I think social media today, there's never been a better time to really invest our time and our efforts to maximize output for that activity. Is that what you're asking, or do you want some more
Yeah.
commentary?
Yeah. I mean, it sounds like, LinkedIn is kind of what you're sort of recommending, where the focus should be. And I don't know, for me, I guess, I don't know what it is, but I do spend a lot of time doing it, mostly on the weekends, because I don't post during while I'm at my other job.
Yeah.
Actually, I schedule it all. I actually found an app that you can create it all in there and generate the graphics and come up with those and then actually schedule them inside the app. So I don't have to go back and forth between that and LinkedIn. It just does it all in one place. So
Yeah.
that alone actually saved me some time. So
Oh,
I don't
good.
used to have to copy everything out, and I'd put it in Word to save it and do the graphics and put it somewhere else and then go to LinkedIn and have to pull them all,
Oh boy.
So there's a lot of steps to it.
Yeah.
So I've cut down some of the steps, but I still spend a lot of time. I don't know, maybe it's because I'm overthinking the content or what I want in it. And, I don't know, but so maybe I need to get better at, how I'm spending my time doing that. So, but yeah, I think from what you're saying, LinkedIn is the place to be, or the place to focus on. So,
Yeah. And it doesn't mean that other parts of our funnel aren't important. I've just found that if that isn't right, if the top of our funnel isn't where it needs to be, really,
right.
that output just isn't where we need it to be. So that's really the number one place to get that snowball rolling that I
Okay.
found. Yeah.
Yeah.
Great
Yeah.
question.
Okay. So the last question for me is
Yeah.
avoiding the plateau. So you're looking back at capital raisers who've had the credibility and experience and the opportunity to scale, but remain stuck for years. What
Yeah.
blind spots or habits or decisions most commonly prevented them from reaching the next level?
Oh, that's a really, really good question. The biggest one I've seen, and we can go into a bit more detail if you want, but it's not treating their capital raising business like a business. And I blame the gurus. There's nothing wrong with the gurus. I went through a guru program. We're all very grateful for how they sparked our interest in getting into syndication and fund management and all these things. But the vast majority of them taught us to treat underwriting like a business, the acquisition side of the business like a business, asset management like a business, and kind of the capital raising side was an afterthought or kind of an asterisk or something that we kind of did on the side. And unfortunately, that just doesn't bear fruit. Capital raising, fund management is a business. So everything that cascades from there, right? What's our strategy? How much time are we dedicating to it? How are we scaling? What are we doing to grow and innovate in this space? Who's our avatar and what are they looking to achieve instead of, what are our needs? And investments too. I mean, a lot of people spent an inordinate amount of money learning how to set up a fund, learning how to be on the acquisition side of the business. But suddenly when it comes to capital raising, people want to duct tape it together, kind of wing it, and aren't willing to spend money to get, a very strong ROI. So yeah, I would say that's definitely the biggest mistake that I've seen.
Okay.
Yeah. Does that make sense? Is there any thread you want to pull on there?
No, you're right. I mean, I've actually been, I don't know if you've ever heard of Nick Aiello.
Yeah.
Yeah, I've been with him for about a year now, and that's exactly how he approaches. It is a business for him. It is his business, basically. He
Yeah.
raises billions of dollars, and
Yeah.
that's, for businesses, he does a lot of multifamily, but for any kind of business, and that's kind of exactly what he says too, in terms of, having the structure and all the right components of what you need. I mean, he's very detailed about it as well. I mean, even down to the CRM and having it organized a specific way that leads investors. He talks about leading. You have to lead the investors and that type of thing. So
Yeah.
yeah, you're basically echoing exactly what he says as well. So yeah, it's good to have the reinforcements.
Oh, great question, friend. Really, really great questions. I really appreciate you joining us today. If folks want to get a hold of you, what's the best way for them to get in touch?
So we have a website, Next Legacy Group, and all of our partners are on there, and our contact information. I'm on there as well. You can also look me up on LinkedIn, Tim Gramling, and I have contact information there. I have my phone number on the screen there if anybody can. I guess for the people that aren't looking at the video part of it, my phone number 573-225-6889. Yes, I don't mind giving it out to the world because I'll talk to anybody.
I love it.
Also have, and then my email address and all this on there. I also have a new website address too that I just, for my own personal, where I have my bio and my coaching business, and
Good.
anybody that what is interested in doing another podcast, that is dlglegacy.com.
Okay.
So that's the best way.
Great. Well, we'll put all of that in the show notes so that it's easily accessible to folks there. And Tim, thank you so much again for taking the time out to join. These were outstanding questions, really, really great insight. And your passion, as I said, is really, really infectious. So please keep doing what you're doing. Really impressed by you.
Sure will. I really appreciate you letting me be here, and good luck to you with love your podcast and what you're doing with it. So
Thank you. Means a lot.
and your coaching as well.
Thank you so much. All right, everyone. Have a great rest of your day. Make sure to reach out to Tim, and we look forward to seeing you on the next episode. Bye for now, everyone. Capital Raisers, thanks for joining the show today. Hey, just a reminder, if you haven't already, subscribe to our Raising Capital for Real Estate Investing newsletter. The link is in the show notes. It's completely free. Every Tuesday, I'm going to be writing this newsletter. It's not going to be AI. It's actually going to be me. And it's going to be full of tips and tricks to help increase your capital raising capacity. These strategies are going to be in addition to what we cover here on the podcast. So you don't want to miss out. You want to make sure you're subscribed for free and get that information every Tuesday right to your inbox. Link is in the show notes, and I look forward to seeing you on the newsletter as well. Have a great day.